Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, at this time on a Monday morning, I'm joined by economist Stephen Koukoulas. You'll find him at thekouk.com and on Twitter using the handle thekouk, TheKouk. Stephen, good morning.
Good morning, Sean.
Big week last week, really. For a week that wasn't offering much, the Reserve Bank minutes and then the Fed's decision on interest rates, plenty going on.
Plenty going on. Well, the Fed was obviously the big one. It hiked the 25 basis points, and I think it had more caveats and qualifications on the decision than I've ever seen before. Clearly, it's worried about inflation. That's why it delivered the rate hike and had an element of hawkishness to it. But of course, it's also seeing the banking problems emerging in the US economy, the slowdown that's occurring in sort of a lot of the leading indicators, not so much in the labour market. So there's something for everybody in that rate hike. I'm not sure whether it was dovish or hawkish, but it was delivered anyway. The banking crisis is still sort of lingering somewhere in the background there, and with Credit Suisse sort of imploding also, the markets are just very, very skittish and a little unsure about what to do. So that was the big thing. RBA minutes. Again, curious, there was a hint that maybe they want to pause. The rate hikes of February and March were sort of the really drivers, I suppose, of the anti-inflation result of the RBA, but they're obviously meeting next week, so a lot's happening and still a lot to get through before we see what the RBA does here.
Now, what the Reserve Bank did say is that it's looking at, I think there are four main indicators to see how things were going. They're interested in business conditions, which we've seen. National Australia Bank, pretty good. The employment market, pretty good. Two others, which we get, one, we get proper figures for February, retail trade, and the other's at least the monthly CPI. The Reserve Bank is very interested in those. What are we expecting?
Well, you're quite right. Just looking backwards at those employment numbers, which were much stronger than I think the market was expecting, the unemployment rate. This is going back, almost 2 weeks ago now, to 3.5% for the unemployment rate. So that was a good number. This week, we've actually got the retail sales numbers for the month of February. Market is looking for a soggy sort of result, a small negative, minus 0.2, minus 0.3 month on month. Remembering that followed a bit of a rebound in January. So the banks who provide the internal data on credit card turnover and direct debit sort of numbers are suggesting that the consumer is paring back. So we're expecting a bit of a softer number for retail spending. The monthly CPI, hard to forecast monthly inflation. It's petrol plus a few other bits and bobs, I think. But we're wanting to see the inflation rate drop from 7.4%, which was in the year to January, down towards 7% or thereabouts. So still elevated, but nonetheless down from that 8.4% peak that we saw in December 2022.
Okay, we've also got job vacancy figures this week. That's a leading indicator of what we expect to see in the labour market. What do you reckon about those ones?
Yeah, job vacancies have been inching down the last couple of quarters. These are 3 monthly figures from the Bureau of Stats, and demand for labour has tapered off a little bit as the economy slowed down. High immigration sort of provided a lot of workers for business in any event. So expect another sort of smallish 2% fall in the number of job vacancies, just consistent with, yes, a slowing economy and perhaps in the next couple of months, a bit of an easing in the very, very tight labour market that we've got used to seeing.
Okay, so a couple of final things. Reserve Bank meets next week. Bond traders reckon that they're not going to lift rates. Market economists like yourself say they are. Where do you stand?
Well, I'm on the on hold. I think the market's got it right this time around. It's quite extraordinary. Even after the Fed hike last week, the short end of the Australian curve and the pricing of interest rate changes in Australia still had no change, basically. There's a couple of basis points here or there, but basically no change. Look, I think there's enough coming through in our local data to suggest the RBA's done a lot. We've got the mortgage cliff still unfolding. We don't know exactly how that's going to play out. So I think one of the last thing the RBA would want to do is hike too much too late, when we already know that there's a bit of weakness coming through in terms of some of the consumer spending risks out there. So they'll still have a tightening bias. That is, if we do move rates again, it'll be up, not down. But I don't think they're actually going to act on it.
The other thing when it comes to predicting the economy is the autumn racing carnival, Stephen. I know you had a nice weekend. You actually had part of a horse, at least, that ran a Group 1 race. Did you enjoy the weekend? Did you enjoy the races?
It was sensational. A little bit damp, but it was great fun. And having a horse that can even run in a Group 1 race is something that's super exciting. So we're just waiting to see how she pulls up. But there's a chance she'll be running in a couple of weeks' time in the Oaks, the Group 1 Oaks. So, it's something that I've dreamt about since I bought the first share in a racehorse many years ago. And when it won its maiden at Orange, I think it was, that was exciting. But, Royal Rose Hill, Group 1, that's what I'm aiming for.
What's the horse's name for the Oaks in case it's in it?
For the Oaks, if we get in there, it's Frankie's me dad.
Frankie's me dad.
And her dad is actual Frankel, who was, of course, the super champion from the UK, who was arguably as good as Winks if you have a look at some of his form. So, here's hoping.
He's hoping. Stephen, have a great week.
Thank you, Sean.
That was economist Stephen Koukoulas, better known as The Kouk. You can find him at thekouk.com and follow him on Twitter using the handle The Kouk. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.